Welcome to Financial Friday. My name is Roshan, and today we'll be talking about a bunch of cool stuff, including what's happening in the world right now and the world economy. On top of that, a couple of other things. So I'm going to turn this off, get this live, and get into it. All right. So let's go ahead and get started with this Financial Friday. Appreciate you guys jumping on. We have been talking about different kind of strategies in the last few weeks, and a lot of these strategies are actually playing off. I don't know if you guys have followed through some of these trades, but so you guys probably noticed that last few weeks have been really insane in just terms of the world economy, or in terms of what's happening in the world for bond market, for the actual recession and the inflation, right? Like there's so many things we are hearing from so many different parts or different people in different experience background, like the federal government, the European economy. And I've been trading a lot more different things. It is not an easier trade right now, just because it's not just as simple as just buying stocks, right? I mentioned this earlier. Nothing in this video, of course, is financial advice, and it's just my opinions, and my risk tolerance is different than yours. So please don't copy these trades and make your own decisions. But anyways, last few weeks we kind of mentioned about how it's not a great time to hold a lot of these stocks. I've mentioned this 4 weeks ago, month ago, 2 months ago. If you're owning stocks, please get out of them as soon as they pump a little bit. And let's just look at the stock market to begin with. So, as you guys already know, that most of the stock market is kind of controlled by S&P 500, right, which is the index. But if you look at the S&P 500, we can probably see this is the last 5 days. Let's look at 1 month. We peaked right here, right? And we have just consistently went down from 4,600 almost all the way to 4,400 right now. So there's different things happening in the world in terms of economical instability to any other thing you can look at, right? So let's dig into the more financial side of things in terms of what's happening with all these big companies. I don't know if you guys know what DXY is, but DXY is basically a dollar index, right? So that's kind of like what navigates a lot of this in terms of the world economy, because dollar index means like the actual value of dollar in terms of the world economy, which is it is at a pretty decent price point still. But if you look at the chart, we were all the way up at $110, right? On right now it's close to $100.49. So what that means is our whole world economy is not really growing right now, just because of a lot of these uncertainties, a lot of these sanctions, a lot of these world war almost trying to become the next narrative, and a lot of different things happening in the world, right? So what I'm going to do is I'm going to bring up some of these currencies, and I'm going to start with Forex. And again, guys, don't think Forex as an instrument to trade. Take Forex as an instrument to understand the global economical present situation right now. So let's look up something interesting. So for a lot of you guys who don't know where Sri Lanka is in the map, let me show this to you first, and then we'll go dig into what I'm going to talk about in this video and why I'm mentioning Sri Lanka. Okay, map. Google map, come on. Alright, so let me zoom out. Of course, a lot of you guys live right here, a lot of you guys live in the Europe, a lot of you guys live in Asia, wherever you guys live at. Sri Lanka is a part of the country right below India, and it's actually an island which is indirectly connected to India, but there's not really any routes which connects the countries. So it's not part of India, it's actually a separate country. It used to be part of India back in the day, but it's a separate country. Why I'm going to talk about Sri Lanka right now is it is kind of the tip of the iceberg, and that's kind of what we are seeing right now, and slowly going to start seeing a lot more. And I'm going to just talk about why Sri Lanka is such an important topic to understand. So let me show you Sri Lanka economy and then Sri Lanka currency. All right, so let's dig deep this into what's happening. Crazy, crazy stuff. Super scary. The Sri Lankan economy is right now in one of the worst financial positions it could have ever been. And the main reason for that is because they took a huge amount of loan or debt from countries like China, and now they're defaulting on that loan because they don't have the economy to pay back the interest rate. They just defaulted on their foreign debts for the first time since this country got independent. That's crazy. That means basically, let's say, to understand in simple terms, you bought a house and you can't pay the mortgage payment, right? That's exactly what happened in this country. What did that do to the currency itself? If this is the Sri Lankan currency chart, this is when we've kind of found out what's happening with the country. The currency has dropped 40%. So which means, if let's say if you were part of Sri Lanka and let's say you own Sri Lankan currency, let's say that happened to the US, every dollar owned is only worth now 60 cents in a matter of a month. What would you do, right? Let's say everything you own in your entire life is now only worth 60% of what it was worth just in a month time. That's exactly what happened to the economy. They literally collapsed the day they announced or they declared like they actually are not able to pay back their debt, and their currency defaulted against US dollar by 40% in less than a month. Is this good? Is this bad? Is this scary? It's very scary and it's very bad because we are talking about an economy, a country. We're talking about actual currency. We're talking about millions of people who have the money saved in bank accounts and now worth only 60%. And why I'm talking about this is the first country, or one of the first country which actually has declared this. Let's see how many countries took a loan from China. There's something called debt trap diplomacy, and you can study this more into if you want to. But what this means is China has been borrowing and lending. China has been lending money to a lot of these small countries on a very high interest rate because they know these countries won't be able to pay them back, and that was kind of one of the strategies where their loan conditions is a lot more different than World Bank and IMF. And because they're a private country, they can have a lot of those regulations implement on the way they want and use those laws against these countries. So to give an example, they basically lended money to Sri Lanka or these countries where the payback period is only 10 years compared to World Bank or IMF gives a lot more than 10 years to pay it back. So what they're doing is they've been lending money to countries like Kenya, South Africa, Uganda, Latin America, Sri Lanka, one of the biggest one, Pakistan, Malaysia, Maldives, Philippines, Indonesia, Tajikistan. All these countries a lot of money, more than they can actually have and more than they can pay them back on these crazy ass loan conditions. So when they're not able to pay them back, what does China do? Go in these countries and start buying these places or start defaulting their loans. So they start acquiring these properties or acquiring these infrastructure, these countries built on that loan, right? So it's a hostile model China has been using in using their buying power to control all of these economies. What the end goal is, no one knows, but all we can see is that they are becoming successful in what they planned 10 years ago for. And that's a scary, scary, scary step because if they're able to invade is the wrong word. If they're able to take over all these small countries, not only it makes them a lot more powerful, it makes them way more stronger in terms of the influence they can have on the other countries. For example, Pakistan. I'm not saying Pakistan is going to default on their loan right now, but Pakistan received a lot of money from China. I don't know how much, if you can see the number. According to State Bank data, Pakistan debt to People's Republic of China was 7.2 billion in 2017, increased to 19 billion in 2018, 30 billion by 2020. I don't know if you guys can see these numbers. They have borrowed close to $30 billion in 2020 from Pakistan. And if they're not able to pay this loan back in their interest payments, with whatever happens or whatever happens in the world economy, guess what happens? China can now buy all these infrastructure they invested money into and own them. So if they can own the route to actually trade through Pakistan, not only that gives them a strategic location to do a lot more influence in Taiwan and India and Himachal Pradesh, they also get to be part of a country which has nuclear power, nuclear arms, right? So this is what's happening, which people don't talk about. And I'm sorry, I'm gonna be a little bit more, I guess, like very passionate about what I'm talking right now, because this is scary. This is very scary, and this is very important for everyone to understand where we're leading towards. So now let's talk about the opportunity, right? With everything happening, there's always an opportunity to make money, and sometimes it's through bad situations, and sometimes it's sad that you're gonna make money from these situations. But I'm a trader, and I trade on opportunities, and I still have my ethics and morals. But if it's a trade, it's more because I can't do anything about this, and might as well just take trade opportunities. So Japan has also been going through something very similar, where they are getting affected because of the world economy going shattering slowly. On top of that, their currency has been devaluating, or sorry, inflating, in terms of the US dollars and a lot of these different currencies, because their tourism has completely been stopped for last 2 years, 3 years since COVID happened. On top of that, there's four different things happening right now in the world. One, US, of course, realized the inflation is too high, so they had to increase the interest rate, and that increasing interest rate makes US dollar more stronger compared to Japanese currency. What that does is Japan used to be a safe haven for the world, and now that's getting deteriorated, and that's ranked number two. That's second point. It's a it used to be a very safe haven asset, and now that's going away. Three, look at this chart. This is Japanese currency since versus US dollar. So US dollar versus Japanese currency. In 2007 we touched this high. 2015 we touched this high and just broke that high. This, if it touches 130, it's gonna put Japan into big time trouble, because a lot of these foreign investments gonna start getting withdrawn from Japan. A lot of countries have taken money from Japan, and Japan is still one of the strongest economies, but this can start affecting their entire economy if they start going through something like this. So that's a third big point, is they're about to break their all-time low since 2002. And if this happens, we're in a very scary spot. It's only $8 away from that point. And if you look at it, it actually went up 20% deflated since 2 years. That is not common in a currency, right? This is what happened to Turkish lira, and this guess we know where Turkey is, right? Last point for Japan. Russia has been testing their missiles in Japan Sea, and because China is never a fond member towards Japan, as we already know, and if you already know the history, then you already know that China always wanted to work against Japan. They don't want Japan to be included in most of these things, right? And as we know from history, China would want to control as much as they can if they have the right opportunity. So there's also economic stability with what's happening with Russia, because if Russia keeps doing what they're doing and dig into countries like Finland or even Poland, not indirectly, just indirectly, by saying like, hey, if Finland and Sweden becomes a part of NATO, we'll start looking at our nuclear capabilities, which is what Putin said, then that scares the entire world. And if that scares the entire world, guess what China does? China looks into their options, and their option is, of course, looking over countries like Taiwan and then Japan. So Japan is in a very tough spot. And if this Japanese currency collapses or goes above $134 against the US dollar, where US dollar is worth 134 against Japan, we might come into those scary waters where it can just literally become into a Turkish economical collapse, what happened to Turkey, right? Next thing I'm going to talk about, and this is a trading opportunity, and this is something I'm going to mention. One of my buddies, really close friends, talked about this as well, and he kind of gave me a little bit idea, and I was discussing this with him. So I've been trading Forex last couple of months, and I made some really good money from this Japanese economical situations. So Euro is right now about to test its last 6-year low of $6, right? The lowest it touched was in 2017, where it touched $4, and they just $0.04, sorry, just to be correct. $0.04, $0.06. Right now it's $0.08. as long as we all agree that Europe is not going to go away and this is going to rebound, and as long as we know like Europe is not going to get vanished from the map, there's going to be a strong rebound at this $1.06, $1.05 level, $1.07 level. And I think this is providing a very good risk to reward ratio opportunity. So if you're able to buy euros right here against US dollar and hold it till it goes at least back around here, which I think it 100% will, then that's right there is a 4x gain, 400% gain with 100% maximum loss opportunity with a stop loss of 1.045. Right there's a trading opportunity I'm looking at, which I'm going to be using on Monday. And if it goes that low, I'm definitely going to pull the trigger on it and buy a lot of euros against US dollar. That's kind of what I dig deep into and found this. Now, next topic I'm going to talk about, it's called so there's something called inverted yield curve. For a lot of you guys who don't know what inverted yield curve is, let's go into a definition to kind of explain to you guys what that means. Basically what that means is the relationship between short and long-term interest rate of fixed income securities issued by the US Treasury. An inverted yield curve occurs when short-term interest rates exceed long-term rates. Under normal circumstances, the yield curve is not inverted since debt with longer maturities typically carry higher interest rate than near-term ones, which makes sense, right? To make a more logical sense of this, basically, the interest rate on a 2-year treasury bonds is a lot less than interest rate on 10-year treasury bonds. Every time this has inverted in history, where this goes higher than the long-term treasury bond, we have a recession. Guess what's happening? The spread between the 5-year notes and 30-year bonds inverted for the first time since 2006 when 5-year yields rose to 2.63%. This is as of 28th March. We just had inverted yield curve on treasury bonds. We just had this chart inverted, as you can see, right? Oops. Can I go back real quick? Oops. There you go. As you can see right there, right? This is last time. I guess this is the 10-year treasury bond minus 2 years. And we know it just touched it very recently. And if it's going to go below that, we are in pretty bad shape, guys. We are in bad shape. And I don't mean to scare you by that. I just mean to that say like we are going into recession. We are gonna go into recession. That's my belief right now based on what's happening in the world. And maybe a lot of you guys might disagree. I would say just go look at literally simple things. I don't want to even complicate it. Just go to Walmart, go to Target, go to normal store and compare the actual prices of a lot of these things right now compared to what it used to be. That's all I was gonna say. And I'll give you guys a clue on like what I'm talking about or what I mean by that. All right. So what we can do to be ahead of this and what we can do to make money or be ahead of the whole curve so we don't lose money, right? Like right now, most people who are even hedge fund managers or people who are very rich, they're not looking at this as like, oh, how can I make the most money? Of course, there's always opportunity and you can make good money if you find the good trades. But right now, it's more important to understand like how can you not lose your money you have so you can buy a lot of these things when they do go below the price they are right now at, right? One of those things you can do is, of course, put in the bank account and earn interest rate. Other things you can do is go to places like BlockFi or Nexo. I don't know if you guys have ever heard of Nexo, but Nexo will provide you with the interest rate of close to borrow cash. I'm trying to show you guys the interest rate you guys can earn on US dollars. It's actually pretty good. It's one of my favorite platforms to earn interest rates. There's a lot more of those, but I don't use Nexo just because I have some other options which are not that simple to use, but it's to use the simplest ones. Nexo is the easiest platform to use if you're trying to get the highest interest rate you can, right? So Nexo interest rates USDT. 20%. You can earn up to 20% APY or APR per year on a US dollar or Tether. You can definitely earn interest rate close to, it's gonna make me log in, so I'm not go through do the whole process, but I'm gonna give you guys a hint of you can earn more than 14%, 15%, and that's something I would do if you're not looking to trade, if you're not looking to be ahead in the market, and it's not easy to do that right now, especially. So if you don't know what to do, sell off your stocks, and if you already haven't done so, you should have done it a while ago, and buy and put that money into US dollars and earn interest rate on it. Next big thing I think we can do to make money, and I've talked about this trade every single time I've done Financial Friday for last 6-7 weeks. Uranium. Guys, I don't know if you guys still think I'm just a dumb guy here or not, but I really think uranium is gonna be the easiest trade to make money in next 2 freaking years, right? I told you guys to buy uranium at $2.50, $2.80 right here, and it dipped, and I was like, okay, this is a perfect opportunity. I bought a hell of a lot of uranium, went up 100%. It's over 100% from that price point. It's 150% up from that price point. So all I'm saying right now is, guys, buy uranium if you think it's a good asset to own, just because I think nuclear power is gonna be definitely next big thing. I know we have solar, I know we have wind, and I know we have hydropower, but to give you a clue, wind is not a sustainable resource. It doesn't even provide enough power to actually break even that easily. 2, wind energy is way, way worse for the environment than you think it actually is. And for all those people who really think wind energy is such a good thing to have, let me just quickly show you and break your logic. Wind energy kills more insects in that 5-mile radius than anything else does. And wind energy kills more bats and birds in that area than anything else does. Not only it impacts on the freaking environment, on top of that, it actually creates a lot more problems with the wildlife and the ecosystem, because if birds and insects are not in that area, it's not just affecting those guys, it's affecting a lot more people. A lot more, I guess, like ecosystem, right? So like bigger things, like people, things which we are feeding on these insects. So now they have no food. So definitely want to be careful before you say that wind energy is the cleanest resource, because it is not at all the clean energy. Wind energy is great because, yeah, it doesn't impact and create carbon emissions, but it does affect the environment. So you're definitely losing something out there. Solar. Another form of energy, and I honestly am invested into solar. I think it's definitely a good transition. All I think about solar is a good transition. It's a good transition from the energy scarcity we have to the next big thing we're going to get to. However, solar still has a lot more side effects. The ingredients which is used to make these panels are still bad for the environment. How much mining is going into space, how much actual solar panels have to be replaced and maintained, and how much recycling you have to do is not that easy and not that clean. So definitely look into that either. Bioenergy, same. It's not that green either, guys. Like a lot of these freaking urban waste, it can have a negative effect because of the global warming emissions. Same for geothermal. So a lot of these things are all kind of out there, and people think like there's such a clean form of energy, but they're not clean form of energies. These are all lobbyists pitch you the idea of green energy, right? And we buy it because we are not looking and researching into it, and then you read more into it and you realize like, wow, it's not even that clean, right? Same for electric cars. Like electric cars are great, they're a good transition, they're a good concept, but these lithium batteries are so bad for the environment. And that's the main reason I'm such a big proponent of literally nuclear energy, is because nuclear energy is the best form of energy right now we know about, which can have the least amount of carbon emissions, and it has the safest, I guess it is one of the safest, cleanest form of energy available out there, which can provide enough power for us to survive off. If you guys have no clue, let me blow up your mind. The US is the world's largest producer of nuclear power, accounting for more than 30% of worldwide nuclear generation of electricity, which means we are definitely ahead of most of the countries in the world in generating energy from nuclear. However, I'm trying to pull out the stats. I don't want to give inaccurate numbers, but come on, allow me. Okay. US gets around 19% of the total energy in the US comes from nuclear. Did you guys know that? I didn't 4 years ago. I got to know about this 5 years ago, 4 or 5 years ago. So, if you guys didn't know that, this is the reason I feel like nuclear is definitely more sustainable, because we are not even having enough number of power plants. There's so much lobbying against the side effects of nuclear that we don't have enough power plants to support it. And now they're all opening up with what Russia is doing, and now people are realizing like nuclear is way better and cleaner than actually not having nuclear, right? So that's an opportunity right there of buying uranium, buying buying a bunch of these ingredients for nuclear, and that's where I'm doing my biggest bet right now. That's my biggest position in my entire account, in my entire portfolio is uranium. My average buy price is $3.11, and I think I'm gonna keep buying if it goes below $5. And it's not a short-term play for me; it's like a 2-year play for me. Next thing I want to talk about, which could be a great opportunity for all of you guys to look into, and that's something I've been looking into as well. If you guys don't know what VIX is, it's basically volatility indexed. It moves on every time there's like a problem or uncertainty in the economy. This tends to go higher and higher, right? That's why when COVID happened, we spiked at 65. Right now it's 22. Look at the all-time chart. You can kind of see it spikes every time there's uncertainty in the world. In 2008, we went all the way to 75. I think we are coming very close to that point where this is about to go to at least 50. So if you're trying to make money and if you're trying to be hedged against the economy, buy this and keep it, right? Just keep this in your account and maybe buy options on it. Who knows? Or just buy it itself, just VIX. Either way, there's an opportunity right there, and I think it's going to go to 50 in less than 6 months to 8 months. So to summarize these trade opportunities I talked about, again, nothing I talk about in this video is investment advice. It's just my opinions, and you guys can treat these opinions as whatever they want. Uranium, good purchase opportunities. Volatility index, definitely good longing opportunity. Euros, definitely a good longing opportunity for short term. Last one I want to talk about is gold and silver. Gold is a good hedge regardless of what anyone says, and I'm against gold because I think it has no real value. But just because all people trade it, it has value right now, and especially since we are still living in a generation where Bitcoin is not as much valued, gold is going to take over most of the hedging from the world. So if economy goes to shit and we actually have recession coming, gold is what people are going to start buying, and that's why you're seeing it right close to $2,000. It's going to probably go to $2,500 in like next 6 months. Same for silver. I own a lot of silver options and gold options. Those are my 4 or 5 big trading opportunities out there I talk to you guys about. I would do still a lot more research, look into things you guys find. Now, let's talk about the second part of this video, which is very cool, and I think this one I'm really, really excited about. So I had a conversation with one of my friends from Australia who's also very, very smart and owns an email optimization company, and he kind of gave me a glimpse of this company called Syntropy. So let's look at this crypto company and why I'm so bullish about this crypto company. So if you guys ever watched this movie where they kind of talk about how they're trying to build towers all across the US to reduce that information sharing period with these stock markets or these stock platforms get to provide to the consumers, because every millisecond or microsecond you can get the information quicker than your competitor, your platform is already better because you give more time to your consumers to use your platform. To explain this in a very simple terms, let's say you're using a gambling website like Bovada.com or Bet365 or BetMGM or whatever you're using, and you're right now betting on a basketball game, and you're right now in the middle of the game, and you are trying to bet that next shot will be by LeBron scoring a three-pointer, right? And he's right now just playing in the field. So every time that information gets moved from the actual game to your screen for you to bet, the shortest time it takes is called latency speed. The quickest you can get the information, the more time they can provide to their consumers to place bets on it, right? That's why it's very valuable. Now, how latency is built upon right now is every company in the world, including the biggest leaders like Google, Microsoft, all these whales, what they use is they use companies like AT&T, Verizon. It's all centralized. They have to rely on these big data providers or network providers to get the fastest latency speed. If they can get that latency speed, they'll invest more money in getting more competitive companies, but still a very, very centralized system. So what Syntropy comes in play, they're actually a 4-year-old company which is trying to build something insane where anyone is able to solve this problem of latency and outages in the networking by providing their internet connectivity through Syntropy, where it's a decentralized network solution for any company to use this route, and it can automatically synchronize it to the fastest route just because it's decentralized. It's connected through everyone's nodes, right? To make it very simple, it's not that easy to understand what I'm trying to explain, but latency is very valuable to every single company which runs on data. Especially if you're trying to talk about metaverse being built, the metaverse won't be possible if we can't provide the user experience for thousands of 10,000 of people being available in the same time, in the same place, to be able to communicate with each other very quickly, and that's where latency speed is very valuable. If we can't solve the problem of latency, we can't solve the problem of metaverse. And that's why this company is trying to solve this big problem by creating the solution where they can decentralize the latency and provide everything with a way quicker rate than we can think, right? So what they did is they have been public for 4 years, but they haven't really promoted themselves. They haven't done too much marketing because I think right now they're more focused on building their actual product and actually creating a real use case. And I think once they're close to that, it'll automatically get recognized in the crypto industry. But Entain was one of the first live examples of public companies using Syntropy to reduce outages and improve network performance. And recently, if you'll read the story, you'll learn that Bet365 went down because of outages, and a lot of these companies did, but Entain didn't because of using Syntropy. And what Syntropy is actually cryptocurrency, which is very decentralized and completely built on the blockchain through crypto. And if they are able to solve the problem they're talking about, they have a huge potential in the crypto space. We're in bear market, so I'm expecting this company to keep kind of going down. And I think my purchase price will be probably close to here, where it's less than a cent. If it gets to that price point, which I think it probably will in next 4 to 6 months or 2 years, I'm probably going to put a lot of money, more than 6 figures, into this coin, because I think this has a potential to do 100x in next 3 years. So those are the main things I want to talk about in this video. I hope you guys enjoyed it. If you guys have any other questions, anything you guys want me to cover, please reply and comment on this YouTube channel. Next week is going to be very interesting. We're going to have a special guest, and it's going to be a lot more fun. And if you guys love these videos, please don't forget to share this on Instagram, share this on YouTube, share this on to your friends and colleagues on different platforms, and please subscribe to the channel and click on like button. Thank you so much, guys. Thanks for watching.